What's up guys, welcome back to InvestingPH. Today I've got something incredibly powerful to share. We're diving deep into a topic that has the potential to change your financial future, even if you're currently working with a modest salary. This is a secret that a lot of multimillionaires and billionaires did to build their wealth over time. That's right, we're talking about the magic of compounding. Now I know what you might be thinking. Compounding, isn't that just a fancy term that financial gurus throw around? Well, let me tell you, compounding is far from just a buzzword. It's a real, tangible phenomenon that can change your financial life in ways you've never imagined. You see, compounding is like having a secret weapon in your financial arsenal. It has the power to take your hard-earned money and turn it into a financial juggernaut. And here's the best part. You don't need a massive salary to harness its power. It's a level playing field that rewards those who understand its principles and have the discipline to let it work its magic. And that's what we are here to uncover today. In this video, we're going to dive deep into the world of compounding and uncover the secrets that can help you build substantial wealth, even if you're starting with a low salary. We'll break down the concept, explore the strategies, and provide you with a roadmap to make compounding work in your favor. First off, a quick explanation of what compounding is. It's like a snowball rolling down a hill, gaining momentum as it goes. When you invest your money, it earns returns, which can be in the form of interest, dividends, or growth in the value of your investments. Instead of taking those returns out, you reinvest them, allowing them to generate even more returns. Over time, this cycle repeats, and the returns on your original investment, as well as the returns on the reinvested earnings, start to accumulate at an increasing rate. The longer you let this process continue, the more your money grows, and the faster it accelerates. It's like a superpower that multiplies your wealth over time. To put it simply, compounding is about letting your money work for you and multiply itself. By reinvesting your earnings, you create a snowball effect where your money grows faster and faster as time goes on. Now that we understand how it works, it is crucial to bear this in mind. Start yesterday, not tomorrow. Time is of the essence. When it comes to compounding, starting early is crucial. So don't wait for the perfect moment or until you have a higher salary. The earlier you start, the more time your money has to grow. Even small contributions can make a massive difference over time. Remember, when it comes to compounding, time is your greatest ally. Let's take this for example, John and Mike, who are both 25 years old. John understands the power of compounding and decides to start investing $500 per month into a retirement account, while Mike postpones his investment plans and waits until he turns 35. His plan is to just invest double the amount of what John invests so as to catch up for the 10 years he didn't invest. Here's where the power of starting early becomes evident. Assuming both John and Mike achieve an average annual return of 8% on their investments, let's see how their portfolios compare at the age of 65. John's investments, compounded over 40 years, have grown to an impressive $1,554,339 from a total invested money of only $240,000. He's reaping the rewards of starting early, allowing his investments to benefit from the compounding effect for a more extended period. In contrast, Mike's investments, even though he invested a total amount of $360,000, have grown to only $1,359,398. Despite investing more money than John's, Mike's portfolio is significantly smaller due to the lost time and missed opportunity for compounding. By delaying his investment journey by just 10 years, Mike ends up with less than the amount John accumulated, despite doubling his monthly contributions. That's the incredible power of starting yesterday rather than waiting until tomorrow. The lesson here is crystal clear. The earlier you start investing, the more time your money has to compound and grow. Even if you're earning a low salary, don't underestimate the impact of consistent long-term investments. The compounding effect has the potential to turn small amounts into substantial wealth over time. So if you haven't started investing yet, don't wait any longer. Begin today, no matter how small the amount. Take advantage of the power of compounding and give your money the time it needs to grow exponentially. Your future self will thank you for the decision you make right now. Now, as we are already talking about compounding, we all know one vehicle to use this magical power is investing, and one platform that will help you out tremendously in picking stocks for your portfolio is simply Wall Street. They have tons of data available for you, and the way they present it is so clear and easy to understand. They give graphs, comparisons, and explanations wherein a beginner investor could understand. They also give you updates on the stocks in your watch list, from earnings release, dividends, insider buying or selling, and when the stock falls below your computed buy price. And speaking of buy price, they also have a computation for you. The best part of it, they have two ways they computed it, from discounted cash flow or from analysts themselves. So if you don't know how to compute it, this will definitely help you out. But a warning, only use this as a guide. You still have to do your research well to identify if the stock is really undervalued or not. And there's more, they also have a portfolio tracker that lets you assess the health of your portfolio. So if you want to try it out, they offer their basic plan forever free, and if you do sign up using my link, you get a 14-day free trial of all their platform's features. Not only that, if you avail of their paid plan using my link, you can get up to 40% discount. So what are you waiting for? Try out Simply Wall Street. Now back to the video. Now let's address the challenge of consistency. I know it can be tough to save when you have a low salary, but trust me, every dollar counts. Consistency is key. Even if you can only save a small amount each month, stick to it religiously. It's about building the habit of saving and investing regularly. As your income grows, you can increase your contributions, but the important thing is to start and remain consistent from the very beginning. As seen in our example earlier, remember, compounding works best when it has a steady stream of contributions fueling it. So in the future, instead of doing what other people are doing, wherein when their income grows, they increase their spending, do the exact opposite of saving and investing more when you earn more. Next is choosing your weapon. Choosing the right investment vehicles. Simplicity is key here. Look for low-cost index funds or ETFs. These are investment options that track the performance of a specific market index, like the S&P 500, or in the Philippines, funds like FM ETF that tracks the PSCI. They offer diversification across multiple companies, reducing your risk, and they have low fees, which means more of your money stays invested. Avoid expensive mutual funds or high commission products that eat away at your returns. Keep it simple and let compounding work its magic in the background. Or you can try what I do. I individually pick companies. These are the ones I see that are strong and has the potential to grow in the future, and of course, give me good dividends. I call my strategy dividend value investing. It's a simple strategy of consistently investing in strong, undervalued companies that gives good dividends, and I just hold it for a very long time. This strategy is actually value investing itself, wherein the greatest investor Warren Buffett used, although this is much harder than just buying an index fund. Next up, by knowing the vehicle you will use, you need to snowball your gains. Here's where things get exciting. When you start earning dividends or receiving returns on your investments, don't just pocket that money, reinvest it. This is like throwing gasoline on the compounding fire. By reinvesting your gains, you're adding them to your initial investment, allowing them to grow even faster. This creates a compounding snowball effect, where your wealth multiplies rapidly over time. So resist the temptation to splurge and let those gains work for you. Let's go to our example a while ago. Assuming you get 8% from reinvesting capital gains alone, and you also get 2% from dividends annually, so without dividends, you get the 1.5 million. But let's say you reinvested that additional 2%, so instead of getting 8% annually, your total interest is 10%, which shoots up your returns from 1.5 to 2.6 million, a whopping 1.1 million more with just an additional 2%. That's why I always say this in my videos about dividend investing. Never underestimate the returns of dividends, because in the long run, it will make a big difference. Now, even though compounding can do wonders to your finances, still, do not limit yourself. If you can, should increase your money-making potential, boosting your income. While we're discussing compounding with a low salary, it doesn't mean you have to settle for mediocrity. The goal is to constantly strive for improvement and increase your money-making potential, thus allowing you to increase your investments and speed up the process of compounding your money. You can do this by side hustles, upskill yourself, seek promotions, or better job opportunities. Always remember, the more you earn, the more you can contribute to your investments. So with that, this ends this video for today. Remember to use compounding wisely. Start early, be consistent, choose the right vehicle, snowball your gains, and try as much as possible to increase your money-making potential. So if you've learned something from this video and still haven't clicked the like button, be sure to do so before leaving. Thank you and see you in the next video.